this Friday. It'll be one of the highest volume days of the year. I've seen estimates we could have 135 billion in equities trading on the close. There's stocks moving from the Russell 2000, the small cap, to the Russell 1000, the big cap, also vice versa. Briefly, for viewers who aren't familiar with this, explain how this process works.
Firstly, let's have a look at the year-to-date performance of the S&P 500 right now. Currently, the market is up just over 15% as of recording this video, but over the past week, we've seen both the S&P 500 and the Nasdaq have its worst days seen since 2022. This is showing us that some rebalancing is happening within the market as money is being pulled out of the S&P and the Nasdaq, especially within the tech sector, and it's being rebalanced somewhere else. Now, there are three main important points that we're going to be talking about on today's video, so make sure you listen up. We're going to be talking about why billions of dollars are flowing out of the S&P 500, where this money is going, and how and if any of these changes will affect my portfolio and my strategy moving forward. But before we begin, let's just start with a bit of context around the S&P 500 and currently where this growth is coming from, because at the end of the day, the market has been making higher highs for a long period of time now, and the main companies within the S&P 500, so your Magnificent Seven companies, have been growing as well. We're seeing a lot of demand, of course, for AI, and these companies' earnings have been exceeding expectations. So because of all this capital growth, why are investors taking money and realizing and making profits on their positions and allocating that money somewhere else? Now, this is the question that we're going to be discussing today. Now, fortunately for me, I do not have a crystal ball, but what we can see right now is the market is getting more and more expensive each and every trading day. Currently, the P ratio, so the price to earning ratio, is 28, whereas the average of the S&P 500, you're looking at about 16 PE ratio. So what this basically tells us, you're essentially paying 28 times more earnings than what the historical average is of the S&P 500 right now. Now, although these higher valuations, we are seeing high growth currently within these companies, but it's clear that the analysts and the large institutional investors seem to think otherwise, and that they can get a better return on their investment in different asset classes, as they are thinking potentially that the market is overvalued. Now, as of right now, we can clearly see that there is a small trend that is brewing where investors are taking some capital out of the S&P 500 and deploying that into small cap stocks to essentially take advantage of potential higher returns. Now, small cap stocks are typically more expensive because they have a greater opportunity to increase their future return, which of course comes with higher risk to the investor. Now, it's much easier for a smaller company to 10x in a certain period of time than to look at a larger company such as Apple to do the same 10x of growth. This is because your large companies are much more mature and have gone through that growth period already. So it's a lot more challenging for them to kind of go through that growth period again, although that's not always the case, as we are seeing a lot of growth within your technology stocks at the moment. Now, with inflation cooling off, the Fed are even more likely to cut rates, which is attractive for small caps because these companies are less likely to be profitable. They take on a lot of debt to fuel their operating and day-to-day activities. So when rates are cut, essentially the cost of them borrowing this money will be reduced, so they can reinvest this money to help them grow even further. Now, of course, these small cap stocks are within an index called the Russell 2000. So there's 2,000 small to medium-sized companies that are powering this index. Now, these of course cover a wide range of industries from tech and healthcare to industrials. And this is not the first time that we're seeing a rebalance. Now, these typically happen every single June, but this time is different, mainly because of the sheer amount of volume and returns that we're currently seeing right now within small caps. Now, stock markets are priced on future expectations. That's why we see large moves happen before an interest rate cut or a particular event has actually happened. People want to get involved early and speculate on these different movements, which are often already priced into the market. As of right now, my portfolio is comprised of ETFs as well as individual stocks. Currently, I have no exposure to small companies or any companies within the Russell 2000. And to be honest, right now, I don't have any intention of adding this ETF to my long-term portfolio. Now, the S&P 500 has typically yielded a greater return than the Russell over a long period of time, which is why I like to have a great exposure to this ETF and not necessarily get dragged down into the hype. That's what we're seeing right now. Now, this is not me saying that I'm not going to take advantage of the short-term swings that are happening within the market, but it's also good to be mindful of what is going on and how these trends are occurring, so you're better prepared to put your money wherever you feel is right to be. So generally, I'm sticking to my plan, investing and dollar cost averaging into my positions and into the general market. Right now, I'm building out a position into Alibaba, which I believe currently is heavily undervalued right now. Now, as a retail investor, and given that the market hasn't performed like this with this crazy rebalance happening, it is going to be quite interesting to see how it all pans out in the long term. Now, I'm not trying to go out and pick, the next Apple. I'd rather put my money into solid, valuable companies at a discount so I can capture some future growth that comes with that. Now, if you want me to reveal my portfolio to see exactly what I'm investing in and why, be sure to drop a comment in the description below, and I'll be happy to share that with you guys. I'll also be interested to hear your thoughts and what you think about the whole rebalance that is happening right now within the market.